and welcome to this week's Property Matters on Dublin South FM, the show that brings global trends to an Irish audience. You can contact us on Twitter at iPropertyRadio or by email at hello@iPropertyRadio.com. Your host for today is myself, Carol Tallon. We are not in the studio today, like the rest of the country and indeed much of the planet. Property Matters is in lockdown due to COVID-19 and we're adhering to all restrictions. I'm delighted to be joined remotely by John McCartney, Head of Research at Savills. John, thank you for joining me today.
My pleasure, Carol.
So, John, a lot has changed in the last week and 2 weeks. So we might just start by asking you from a Savills point of view, are all Savills employees now working remotely?
Absolutely, yeah. We're open for business. Everybody is mobile enabled, so we're all able to work from home. And aren't we lucky that we work in an industry where we can do that, really, when you see the fallout in the labour market? The other thing, I suppose, is that we obviously have a huge presence in China where this outbreak first arose, and all of our offices as of last week are back up and running in China. So we opened the Wuhan office again last week, and that was the last one to be reinstated and fully open and working.
Very interesting. So you actually have a bit of, I suppose, a little bit of a group experience here to draw from, unlike many firms in Ireland. How many weeks were the Chinese offices shut down for?
Well, it depends. They didn't all reopen at the same time. The Wuhan one was obviously the last to reopen, and in Beijing there are some restrictions still on occupancy levels. So while we've reopened the office in Beijing a number of weeks ago, but you can't have full 100% occupancy there. So there's a sort of a roster system in place, But generally, it was, I think, 8 weeks before everything was back up and running, more or less. So that was the timescale in China. Now, I suppose, look, we have to we have to have regard to the Chinese experience because, as you say, they were the first to get the bug, and so we've something to learn from their recovery. But equally, there's a lot of differences between China and Ireland or any other European country, both in terms of the way we might seek to deal with this, but also the physical conditions. There is a different climate that obviously has a biological effect on the transmission of the bug. People live and work in closer proximity in Asian cities than they do in European cities generally, and certainly in Irish cities, which again has an impact on the transmission. And there are, of course, things like demographics. We know that Italy has the oldest population in Europe, and that has been cited by a number of people as a sort of a reason for the high level of fatalities in Italy, or at least a contributing factor. So there are lots of moving parts here, and I suppose we do have to look at what's happening in China, but we can't be assured that the path to recovery in Europe will follow exactly the same trajectory.
Yeah, absolutely. And there are so many factors at play, as you rightly point out. But say if we look to, if we narrow this down, say to a business perspective, or certainly for the business of real estate, obviously we know that technology plays a huge part in keeping things, it's certainly not business as usual, but keeping things operational. So from the experience across maybe some of your international offices that were closed, maybe particularly in China, where you had closures for 8 weeks, was business able to continue? And, if so, to what extent?
Yes, absolutely. I mean, you can still do all of the communication with your clients and all of that through the various different facilities, and we're using a mixture of tools, including Skype and Microsoft Teams and Zoom and various other different things, and that has been the case, I believe, across the global network as well. And individual teams find what works for them from the range of options that they have. But at the end of it all, there are two things. Firstly, it is a people business, and people like to go in and see the properties that they're buying, whether that's commercial investments or residential purchases. They like to be able to go in and see it, and certainly PropTech will take you so far, but there's no substitute for that, because at the end of it all, these tend to be big purchases, both the commercial ones, obviously very, very big, chunky investments, and also, for families and households, purchase of a property is obviously a very, very big life decision. So people want to go in and see these things. And the other thing is, it's created uncertainty. And our experience, I think, on the commercial side certainly has been that most of the deals that were underway, at the onset of this pandemic, have continued to remain alive. They're happening. My apologies, Carol. I don't know if you can hear that on the line.
No, you're fine.
These deals have continued to sort of progress behind the scenes, and everybody's continuing to do their due diligence, and everybody's continuing to get their legals in order so that they can pull the trigger when the time is right, assuming that the COVID-19 pandemic is more or less dealt with, I think, in a sort of a 12-week time frame. I think that's what most people have in mind as a working proposition. So I think what we're going to see is we're going to see the deals getting to a certain point. Now, whether people will actually go ahead and sign these deals in the midst of all of this uncertainty is unsure, but I think they will probably get them to the point where they're ready to sign, and by that stage, hopefully, we'll have more clarity and people will be comfortable to go ahead and do the deals, having done the due diligence already. But it remains to be seen.
Yeah, absolutely. And I think there's a huge difference if we break down not just between residential and commercial, but actually if we break down between for residential home buyers versus investors, because obviously we've seen over the past certainly 7-8 years, we've seen this transition to online auctions. So we know that investors are comfortable buying properties that they've never set foot in. But I don't know if that's true at this time for home buyers, whether they're first time buyers or people trading up or down, because you very rightly pointed out there about PropTech. PropTech has huge capabilities, and I've been such a proponent of PropTech over the last number of years through PropTech Ireland, but also on the show here over the past year or 15 months that we've been on air. We tend to dedicate at least 1/3 of every show to emerging technologies for the built environment, whether it's for property or planning or construction or visualization tools. And while I'm utterly confident about the capabilities of PropTech, I think what this current pandemic is teaching us, it's really teaching us the limitations of that. And one of the big things is that we've seen that culture change hasn't kept pace with the change or with the pace of technology innovation. So what I mean by that is I don't know if home buyers are ready to commit to a purchase of a property that they haven't set foot in, which I know we should be part of the way there in terms of our experience of purchasing off plan. But there's something a little bit different about that. People can still visit the site. They can still, walk around the site. They know what their neighbours are, who their neighbours are going to be and what the neighbouring surroundings are going to be like. And I'm not sure, have we made the culture shift for home buyers to be able to proceed just using technology?
I think you're probably right, Carol. And maybe the interesting outcome of all of this when the dust settles, and it's not, obviously not to trivialise the public health implications, and there is going to be genuine grief and hardship for individual families that are affected by it. But
of course,
the property market, it could be that this sort of the adoption of these technologies happens not necessarily in a linear fashion over time. Often it takes a catalytic event to stimulate the adoption of these technologies, and this might be it. So maybe this will be the proving of online platforms. It may be the factor that sort of causes them to go into the mainstream, just as it may be the factor that causes the working from home model to become more mainstreamed.
Mm-hmm.
And people are just more comfortable with it because the technologies that I mentioned earlier, Skype, Zoom, Microsoft Teams, have been around for quite a while. But speaking for myself, I wasn't a huge user of Microsoft Teams, for example. And now I'm having meetings on it every day. And you find that there's nothing to be scared of. The technology works and everybody initially muddles through a little bit, then gets comfortable with it. And the concept is proved. And it may well be the case with online trading platforms too, you know?
Yeah, absolutely. I think that's going to be a critical factor. But I suppose all of this, well, there's two things. First of all, that it's really widening the gap between the estate agencies and the property professionals who have embraced technology and those who haven't. So the firms that embraced PropTech over the past number of years, they have a head start on this. And I just wonder, say for smaller regional estate agencies across the country that are in areas of poor broadband, that might have a different demographic of buyers and sellers and landlords and tenants. I'm just wondering, will they be in a position to catch up? Will the learning curve be too steep? Will the investment required be too much at this point? Are we going to see this essentially being the final nail in the coffin for some estate agencies that just haven't kept pace over the past decade?
Yeah, I do think that some of the smaller brands are under pressure, or the sort of independent estate agents, and that has been the case really, Carol, I would say since before the COVID-19 pandemic. It's a tough business model. You cover a lot of ground and you burn up a lot of shoe leather for it's a relatively tight margin business, residential resales particularly. And so, in that context, then the temptation is always to forsake CapEx, and obviously the smaller brands are the ones that are more likely to do that because they can't absorb the costs, and spread them across multiple offices. So you're probably right there, Carol, but it's probably just going to accelerate a trend that I think was already in place. I think we've seen consolidation in the sector, and I think we've seen a bit of a shakeout even before COVID-19 as well.
Yeah, I think you've hit the nail on the head with that. I think what we're seeing now is an acceleration of a trend that was absolutely on the cards. But let's break it down. Let's break it down between, say, the second-hand homes market and new homes, because in fact, the agencies that we're referring to there, maybe independent agencies in more regional areas, they're less likely to have new homes on their books because we know that there's been less new homes development in those areas. So we saw earlier in the week, Professor Ronan Lyons forecast that the second-hand sales market is likely to freeze, I think was the term he used, over the next couple of weeks. So I suppose firstly, from Savills' point of view, are you starting to see that?
Well, it's probably too early to say. My perception is that there will probably continue to be a trickle of transactions happening, and so, for example, we know that the local authorities are active in the market buying second-hand properties in order to meet the housing needs of their client base. Likewise, the AHBs, or the housing associations, are doing similar, and they have their budgets in place, and I suspect that they will continue to do deals over the next few weeks, regardless. But then, looking at it from the point of view of the individual householder, again, we do have a lot of headwinds there, as we've discussed. There is the physical barrier to getting out and seeing the property. There's the physical barrier between you and your solicitor. You can't go and sit down and meet them. The online platforms, as we say, I think will enable people to continue their searches and to prep for the moment when the restrictions are lifted and normal business resumes. So I think that will all go on in the background. But I think Ronan is probably right. There will be certainly a sharp slowdown, I would say, in transactional activity.
Okay, and if we look towards the new homes market, up until really the weekend, the delivery of housing was still ongoing. Building sites were still open while it was controversial, particularly those providing or delivering social housing to the market. We know that has now stopped. So today, we're recording this show on Monday morning. We know that activity has stopped on construction sites, and the only essential construction activity will be that related to the delivery of projects in direct response to the COVID-19 pandemic. So how can the market bear, or can the market tolerate a slowdown in the delivery of homes at this time?
I think so. I presume what you're driving at there is you're sort of you're talking about the perceived acute housing shortage, and what is this going to do to the fundamentals of the market? Is it going to starve the market of supply at a moment when we need to be building as many units as we can get? Is that broadly what you're asking?
Yeah, absolutely.
Well, I've never been a huge subscriber to that theory. My view, Carol, has been for a while, and by that I mean 18 months or 2 years, that the residential market in Ireland generally, and certainly in Dublin, has shown all the signs of a market that's coming into equilibrium.
Mm-hmm.
So what do we know? We know that we've had, a 4.5-fold increase in new dwelling completions since the low point back in, I think it was 2013. So there has been a big recovery in housing output. Last year, new dwelling completions were about 21,000. Nationally, people would argue that that's not enough, but I would say two things. I would say, first of all, we must remember that there is additional hidden supply that I never hear anybody talking about. So we built 8,600 student beds since Q2 2016. They clearly feed into the overall supply of housing, because if it wasn't for them, the students would be out procuring their accommodation in the mainstream PRS.
Yeah.
So that's a material source of supply. I think many people don't know that when the ghost estates, when those came out of mothballs and started to be finished out, all of the units that were in that category were not counted as new dwelling completions. Now that's a declining balance at this stage. Most of those have now been built out, and the sort of the monthly flow of completions in ghost estates has reduced to a trickle, I would say. But looking backwards, you can't ignore this, because it has been a very material source of supply, and it's not counted in dwelling completions. And then all those local authority voids that have been brought back into use. These are properties that were boarded up and derelict and have been brought back into use. De facto, I think we could consider those new supply as well. So when we add all that in, those three sources combined have been adding the equivalent of about 4,000 additional units a year. So the 21,000 as measured by new dwelling completions last year, in reality is more like 25,000 or even a bit more. So that's the first point I would make. And the second point I would make is, any discussion about whether that is an adequate number of units to be building has to be, of course, framed within the context of how many are needed. Mm-hmm. And, doctors differ and patients die. It's maybe an unfortunate turn of phrase in the circumstances, forgive me, but there is a variety of opinion out there as to what the housing requirement is. And my view is that the housing requirement has probably reached a peak. It's mostly based on population growth, which can only depend really on three things. That is births, deaths, and net migration. In terms of births, the number of people being born every year has declined sharply since 2010, and the reason for that is that there's fewer women in the age group for having children, and we know that that's going to continue to be the case for the next 3 or 4 years, maybe 5 years. The number of deaths is rising each year. People don't realise that, but it is the case. And the reason for that is that the population is getting older, so the death rate per thousand in the older age group has been reducing due to better medicine and better lifestyles. The absolute number of old people has increased, and as a result of that, the absolute number of deaths is rising. And then in terms of net migration, last year we saw a slight reduction in net migration compared with the year before, and we should have been surprised at that, because on average, looking at it over 70 years, Ireland has been a net exporter of people. The flow of net migration has been highly cyclical. The average upswing in a cycle lasts for about 11 years, and we're currently in year 6. So you would have expected net migration, based on observation of previous cycles, to have peaked sometime around last year or this year. And sure enough, it got to 34,000 net inward migration in 2018, and it actually went down a little bit last year. And according to the ESRI last Thursday, we can look forward to maybe a further reduction in net migration this year, directly related to coronavirus. But the other thing about it is high-level stuff. Just look at where Ireland is. We're hanging out there in the North Atlantic with a big body of sea between us and the rest of the action. And, the two things that drive migration to a country are, number one, geographical proximity. People move as short a distance as they can to get an improvement in their living standards. And the second factor is that improvement in the living standards. What is the income differential? And Ireland is certainly by no means a low-wage economy in a European context, but we're in the mid-table. We're not at the top of the league in terms of living standards. And if you believe that most of the migration would originate in the south or the east, then there are other countries that are closer to those sources of migration than Ireland. And you'd question why people would go through those countries to get to Ireland. If we don't have higher living standards. So overall, I sort of think net migration has probably peaked for this cycle, and as a result, population growth is probably at a peak in 2018, 2019, and will probably edge back from this point. So I think that on the supply side, it's been ramping up strongly, and we expect that to continue. There was 8,600 units actually on site under construction at the end of last September in Dublin. That's comfortably a cyclical peak. And so on the supply side, I think the rapid increase in output that we've seen in recent years will continue, notwithstanding the hiatus that we're going to experience because of COVID-19. And on the demand side, I do think demand has probably plateaued and will ease back. I certainly think that some of these estimates of how many units we need building to cover obsolescence of the stock are hugely exaggerated. And I think that these arguments about the declining household size demanding a certain amount of additional housing are also wide of the mark. Empirically, the average household size hasn't really moved for the last decade, and the reason for that is we had a huge baby boom between 2007 and 2012, and even the biggest of those children is only they're only coming 8-9 this year, so my take on it really is that the babies can't live in single person households. They tend to live big households with their mum and their dad and their brothers and sisters. So you've got given an increased weighting to a cohort of the population that tends to form big households. And equally, we've had a sharp contraction in the number of people in their 20s actually over the last decade. And they're the ones that tend to live in small households. So putting it all together, I think the market, based on fundamentals of supply and demand, has been coming into equilibrium anyway. And you can see that in the pricing signals. If you look at house price inflation, it was on a steady and fairly pronounced downward trend long before coronavirus kicked in. Back in April 2018, house price inflation was over 13%. It had gone to more or less nil, by the end of last year.
Yeah, and I think that's something that has gotten lost in the rhetoric over the past week or 10 days about this pandemic. The fact that there was a trend in place already.
Correct, Carol. And many people, I think, have tried to pass this trend off as a sort of a side effect of the mortgage rules. And again, I don't believe that either, because I ask you this. Well, I ask you two questions. I mean, the first question is, well, if it's the mortgage rules, how come rental inflation has been slowing as well? Surely the mortgage rules aren't causing that to happen. And secondly, if you take one of the regional markets, let's take the Midlands or the Southeast, the average property in the Midlands is about €190,000. A couple on average earnings in the Midlands can borrow about €250,000. So the mortgage rules are clearly not a binding constraint in the Midlands, but yet house price inflation has slowed in the Midlands and the Southeast, just as it has in Dublin and Cork. So overall, to me, it looks as if supply has been catching up with demand, and that's just been bringing about a more sensible market with more moderate house price inflation. And more recently, that has also brought sort of more moderate rent inflation as well. And I expect that, when this current crisis passes, that we will just see a resumption of that, really, that the markets just become more balanced.
Okay, and that's something that, of course, we must welcome.
Absolutely. I think there's no winners in the long run, from very high housing costs. I think it just is, it creates human misery, it creates inefficiencies, and it's sort of cuts against, our ambitions in terms of national productivity. So absolutely.
And John, before we let you go, maybe just a quick word about the commercial market, because obviously what we've seen at the moment are commercial tenants looking for a rent freeze. Is it too early at this point, without knowing how long this market hiatus, as you put it, is likely to continue? Is it too early at this point to be able to forecast how this is likely to impact on the commercial market performance for 2020?
Probably is, Carol, to forecast in any level of detail. But I think we can have a sort of a common sense view of how it's likely to pan out in the certain sectors. So in retail, obviously the income flow has been cut off at the ankles for many retailers, and since even so, if you go back to the week beginning the 9th of March, there was a 28% year-on-year decline in Dublin city footfall. We go to the week beginning the 16th of March, the following week, a 66% decline in footfall, and that was before the non-essential shops were shut down on the 24th, and indeed before that was further tightened on the 27th. So every time a customer decides to stay at home and not go to work, that's potential potential loss of business for retailers. So their income has been cut off straight away. And I suspect landlords are already coming under pressure to give abatements. You saw data released from British Land and into last week 2 big institutional retail investors, and they had both detailed the extent to which they were offering rent abatements. So I suspect that will be happening. And you've seen, of course, that for its part, the government has put a pause on commercial rates for the affected industries for 3 months, which I think is a very positive thing. In terms of offices, I think it's slightly different because, really, the big occupiers of office space around town are, of course, the US tech multinationals take a lot of space. And also, we have the public service that takes a lot of space. So I expect that the pressure on rents won't be the same there as it would be in retail. I think industrial is an interesting one, or logistics. I think it's an interesting one. I think there will probably be some logistics firms that are really, really busy at the moment because people are getting their groceries brought in and they're having stuff delivered to their house, whereas they previously would have been out, collecting stuff themselves. But I think in the long run, this pandemic is a net negative for the logistics sector because ultimately, we're going to have a sizable labour market shakeout. There's going to be people who were earning good salaries and they're going to suffer a big reduction in their incomes. That's going to hit personal consumption expenditure, and ultimately, in a country like Ireland, where we're not a big producer of goods, we're more, logistics. In a country like that, it's more the activity in the logistics sector is dictated by consumption. Consumption is going to fall, and I think there will be pressure on logistics operators as well in the short term. But I think at the end of it all. If the sort of the mainstream perception comes to fruition, then this should probably be a sort of a 12-week event with a bit of a shoulder to recovery then in Q3. That's our central case at the moment based on the experience in China.
Yeah, and that's probably the best that we can hope for at this stage. But of course, it's too early to say. We will leave it there. Our thanks again to John McCartney, Head of Research at Savills. We need to take a quick break now. Stay tuned.
Everything's fine on 93.9 Dublin South FM.
And welcome back to Property Matters on Dublin South FM with myself, Carol Tallon, recording from home as the government guidelines have stated the radio station remains closed and is operating remotely. So I'm delighted to be joined on the line by Pat Davitt, CEO of IPAV. Pat, you're very welcome.
Thank you, Carol.
So Pat,
we're all recording from home.
We're all recording from home. Every piece of technology that I've been pushing for the past 5 years is being tested, and I can tell you not all of it is holding up.
Okay.
Pat, it's been a not just difficult. It's just been a couple of weeks of uncertainty, and then when things change, they change very quickly. How are you finding things for your members? How are you hearing from them?
Well, the property market, I would say at the moment with most members, there are some sales still happening, believe it or not. There are some sales that are falling through, and there are some sales that people are negotiating and discussing and leaving as are at the moment until such time as the whole corona settles down and we see what's going to be the other side of this. So okay. I suppose it's a quiet time in one way. Most people are working from home, and I suppose that in itself is causing its own problems because none of us were I'd say, were set up for this originally at all. But now things are quite different, and people are probably into it, and it's a different thing, I suppose, with people now as to what they're doing.
Yeah, it's difficult to know, isn't it? So if we break down, say the different property, different property types, we can see that just anecdotally, it seems to be that people who had already sale agreed their property, that their intention was at this stage is still to proceed. They're perhaps feeling that at the moment they're not feeling the threat in terms of job security. If they've already viewed the property, they seem to want to proceed. But some interesting things we're hearing is that solicitors are advising potential buyers or would-be buyers, even after they've paid the booking deposit, not to proceed with the transaction because it's likely that prices will drop in the short term. Have you seen much of that?
That's the first I've heard of that.
Yeah,
I haven't heard that at all, and I don't know what, solicitors obviously can advise what they like, but at the end of the day, they no more than I or anybody else knows what's going to happen when we get out the other side of this COVID. And the big thing about it is, obviously, that a lot of the markets, especially out of Dublin, they're still probably 30-40% behind where they were in 2006. And even the Dublin ones, there's been a sizable correction there in the past 18 months or so, possibly from 20-25% in a lot of the Dublin markets. So the prices are sort of, they're not huge at the moment. So I don't know whether it would be safe advising that or not, and that could well be the case. I don't know.
Yeah, well, I suppose it's impossible to see at this time, because certainly I read over the week that Roland Lyons has predicted that the second-hand sales, that they're likely to freeze over the coming weeks. Did you see that? Yeah, that is, in transactions are likely to stop. I know that for properties listed in March so far, I think we're running at about 2,700 or 2,800, and that's compared to 4,100 this time last year. So we know that there are fewer second-hand homes being listed for sale this month.
And I think that makes sense, because a lot of the viewings and thinking of selling aren't going ahead.
Yeah.
Because auctioneers don't want to go to visit people's houses, and people who own houses don't want them coming to visit their houses either. So I think a lot of people would have said, look, we leave this off for the moment, and when there's some clarity in what's going on, then we put our property back in the market again. So I think that would be the case, all right. And I'd say the homes that you're talking about, the second-hand homes, yes, probably some of those sales would be sort of frozen, all right, but at the same time, many of them that's vacant, second homes that are vacant, I think they're still going on, and I think that they will probably finalise in the near future, probably before the COVID is over, I'd say, indeed.
Yeah. Okay. Yeah. No, that's it. That's interesting. Ones that are already in train. And in terms of new homes, or perhaps transactions that would generally be done off plan anyway, do you think that this is likely to have as much of an impact on those types of sales?
Well, it's after the new government list that was issued on Friday. That list has closed all of the sites for new housing.
Mm-hmm.
So I think whether we like it or we don't like it, even to get into valuations, apart from viewings and everything, even to do those, it's not possible to do them. And while people can look, at online, and you can look at it and view a house and see what sort it is and everything, but at the same time, from I think all auctioneers' experiences, nobody is going to buy a house on the internet. They're all going to want to visit the house at some stage, whatever that's going to be.
Yeah.
So that, I think even the new houses now, will have come to an end, unless, again, there are some that are contract signed and that they're finished. But even to take possession of those houses now on site is going to be quite difficult.
Yeah.
So I'd say for the next 2 weeks, I think things are going to be quiet in the new houses as well as the second-hand ones.
Okay, and how are your members feeling? Particularly outside of Dublin, what kind of sense are you getting from them?
Well, I think it was a huge thing. The first big thing was it was a huge thing to close their offices, because I'd say auctioneers' offices weren't, like, right down through the last recession and everything, like, they were never closed before. So I think it's a big, big thing. I think it's closed offices, but lots of people are in the same situation as apart from auctioneers. Like, they would have to close their offices or their shops or whatever else. So it's just a big, big thing. It's a big shock for them, I think. And auctioneers were no different. Mm-hmm. So that then they were working from the back offices, and most now are being working from the back offices, they're working from home. Mm-hmm. So there's, it's a complete different transformation for them. And trying to do business from home on some things that we all thought probably would work, that some of them do work and some of them don't work. From a technology point of view, I think it's a challenge, and it's a challenge for everybody. And then obviously, then you have got staff that have to go with it as well. Even though the government schemes have been very helpful, very good, and very set up very quickly. Mm-hmm. But even at that, though, like, to have staff for years, auctioneers would have in lots of offices. And again, it's difficult for them to be talking to staff about maybe having to let them go, or maybe having to pay them to keep them involved in the company, or whatever way they're going to go about it, or maybe keep paying them themselves for a little while because they feel that they need to do that. So it's a trying and a quite difficult situation. There's no doubt about it.
Yeah, and do you think, and I have no doubt about that, and I'm very mindful of the marketplaces that you mentioned earlier in the interview, the places certainly outside of urban centres that haven't experienced full recovery by any stretch of the imagination. And I think that that's something that gets lost a lot in the conversation when we talk about, the shortage of homes and house prices. Even over the past 2 years, when we were talking about house prices moving ahead, that wasn't happening across the country. That was happening in pockets, but we still have pockets now that they never recovered. They were very vulnerable even coming into this year, and now this, will they be able to withstand this? If it lasts 2 weeks, if it lasts 8 weeks, if it lasts 12 weeks, will your members be able to withstand that?
I think there are members which, from the closed offices, I'd say that the chances are some of them won't reopen again. There are probably going to be new members who will open new offices and do things differently from their point of view. But it's a terrible pity for some of the older members that have been for years in the auctioneer business, and maybe even for generations, to have to close their offices. I know that we all want to do what the government asks us to do and everything, and auctioneers are no different than that. But at the same time, definitely that is the scenario. I think you painted it correctly, and I think throughout the country, I think in smaller towns, smaller areas, because we have members in towns, most towns in Ireland, and I think definitely there will be some people that will probably be left behind by all of this, which is it's a terrible shame, really.
Yeah.
Unfortunately, the way it is, and like people, you have to do what the government wants you to do as well, because obviously it's in all our interests, and nobody wants to be doing anything outside of that, because we all want this to go away as quickly as we can, and we all want to do what we can to make sure that everybody, our neighbours and everybody else is safe as well. So, it's very important.
Yeah.
From that point of view, but obviously when it's all over and businesses, then we're back to businesses again, and we're back to livelihoods again. It's going to be slightly different.
Yeah, look, I absolutely understand what you're saying there. Obviously public health comes first, and one thing we know in life, and it was really brought to the fore during the last recession, we know that priorities are relative, and if there are health issues, then they consume as a priority. But if there aren't immediate health issues, then actually survival turns to something a little more base, which is keeping your job or keeping your business going. And there was, I certainly felt there was almost an assumption that most people could operate their businesses remotely because the technology has existed for nearly a decade. But the reality, as you pointed out there, not all the technology is working the way we thought it would work. It's different when we're using things as a convenience and when we're using them as a necessity. We're really testing this technology, and it's not all holding up.
And it's not, and a lot of people don't want to do that. Like, you you can talk about visually viewing properties and everything, and all of that, and it's great. Like, you know, it keeps people, you know, looking at properties, and it keeps property in the limelight. But at the end of the day, people want to see a property. It's not like buying something online. Like, you know, you buy a dress or you buy a pair of trousers and you don't like them, and they're too big or they're too small or they're too colourful or they're too whatever they are.
Yeah.
And you put them back in the bag and you send them back. You know, if you buy a house online, you know, it's a completely different kettle of fish because it's caught with fees, you know, like, you know, between stamp duties and solicitors and auctioneers to buy them and sell them. Like, you know, you're into quite an amount of money. So that if you don't like the property, well and good. So obviously people are going to make sure that they like the property before such time as they buy it. So they're still going to have to view that property. And like, you know, that's the sort of, I suppose, that's the traditional way of selling and buying properties. And I can't see that changing anywhere in the future. Certainly not in the near future.
No, absolutely. I just, before the break, I spoke with John McCartney from Savills, and, you know, we did discuss how culture hasn't quite caught up with technology. And that's one thing we know. So the technology exists to do almost all of the property transaction from start to finish online. But that doesn't mean that people are ready to do that. So that's a part of that's a link in the chain that doesn't quite work. It's not quite connected. And, you know, this might change that. It might accelerate it, but we're not there yet. And I think that's a really good point. Pat, what can be done? Like, what kind of guidance? And I know this is really a big question to ask you, but, you know, what kind of guidance are you giving to your members? What can they do to be, I suppose, to make their own business models and their own offices more robust in preparedness for coming out of this?
I think just go back to what we were talking there a second ago. Like, for auctioneers to see, like, you know, from purchasers, when you sell a property to a purchaser, a new house or whatever, to a purchaser, and they're a young couple, and they want to come to view the house, and they view it once, and they view it with their mother, and they view it with their father, and they view it with their father-in-law, and they view it with their brothers and their sisters, and they could view a property 10 times. And the joy of all those people, because they've seen something in the property originally, and then they're telling everybody else about what they've seen in the property, and the joy that all that brings to people, like, you know, even to see it as an auctioneer, it's a huge thing in the purchase of property, because it's the delightfulness, I suppose, in one way, that they're buying something that really they're going to be in, and you know that they're going to be there for the rest of their lives. So it's really good from that point of view. I suppose, what can you do, or what can members do to get ready for when we come out of this? Like, we'd like for the government and the banks to increase the loan approvals for the 3 months. We think that that's going to be a big help to people when we come out of this, because purchasers, as it is, granted, when we get out of this, because we're in at the moment, and the problem is that, like, recessions come, and I've seen them from when I started business in 1980, and I've seen a few of these recessions. They come and they go, and they're all financially based, and property prices fall, and last time there was a lot of credit in the marketplace. But this time there's an added thing to it as well, and that's the loss of life, which is a huge thing from people's point of view. So it's not only about money, or it's not only about prices, or it's not only property that aren't available or whatever. You know, there's a big thing there this time. But we would ask the government, and we'll be writing to them and the banks as well, to see if they would look at extending the loan approval for the 3 months. They've done this in England, and we think it's a great idea, because it gives people the opportunity, when they come out the other side, there's no big rush on them to complete a sale. If they want to, and they're happy to complete the sale, and the pricing is right, they can do it. The consumers are there, and it's something extra for them, I think, as well, because there's not a push on trying to complete a sale. So I think that from agent's point of view, I think this would be good if this happened. I think, as well as that, from our point of view, like, you know, I know the banks they're pushing out the loans for 3 months and interest and everything like that. But I see in Hungary that pushed out to the end of the year. The government brought in a law to allow the banks to do this, and they have done that. like business needs, now we need to be getting ready for when we get out of this.
Yeah, that's so true, and that's something that historically we haven't been great as a nation at. But I feel that the government have been so preemptive, and they've been so decisive and strong and prompt in their actions. You know, from a public health point of view, but also from a business health point of view, for protecting people and then protecting people's incomes and protecting businesses and helping businesses to protect their employees. They've been so proactive. It feels like this is something that if they felt they could do it, they would.
Yeah, I think they have been very proactive, and I think they've been very, very good from that point of view, and protecting. Like, I know there's going to be huge cost to this, but like, you know, at the end of the day, it has to be worth the cost, and it is worth the cost. And the government have been doing very well in it, and especially from businesses and from employees' point of view. Like, you know, it's there that they have done all of these things, and very quickly, which is the big thing about it. They put these things they put these schemes into train very, very quickly, and I think that end of it is very, very good. And so that, I suppose, really all people can do is hope that we get out of this as soon as we possibly can. I think for people in the future, some people obviously will want, and some members will want to use a lot more technology. Some won't. It depends. We would like to think that we would be able to get a buyer's pack together, and that the government would actually support this, and that this buyer's pack would include contracts for sale and legal documentation, and that we would like to have this for every property before they go on the market. And we will be talking about this in the next short while, because we see with conveyancing and gazumping and everything that this is really the way to go, that all these documents should be there before such time that somebody wants to look at a house or to buy a house.
Okay, and
the documentation should be there and ready for it.
And Pat, that makes absolute sense. Does that mean maybe we could move away from this dual deposit system that we have in Ireland and move to something that's better for both parties?
Well, I know that England are looking at the moment, it's sort of a buyer's agreement is what they're looking at. Because at the moment in Ireland you can buy a property today and you can pay a deposit on it today, and it means absolutely nothing other than goodwill.
Yeah.
I know some people think that it means that you buy the property and that nobody else can buy it, and it actually doesn't, because somebody can gazump you. You could be down the line 10 weeks and somebody could gazump you, so it doesn't really mean an awful lot. We looked at buyers' contracts before. When you buy something, that there would be a contract there for the sale of, to guarantee the sale of the property, like, you know, the price of the property. But I don't think it was a runner from the solicitors. But I think if there's a government-backed buyer's pack, with all of this information, now it could be in England they did this many years ago, and they put engineering reports and everything with it, and engineering support with it. But I think whether we go down that far or not, but certainly the legal documentation needs to be there, because it's taken too long to get the legal documentation together. And I don't think it's at all the solicitor's problems. I think there's planning and all sorts of different issues together. But I think that if we're working on it for start, the minute somebody goes to put the property in the market, that this information is got and put together, I think it's going to be a huge help for sales in the future. It's going to happen quickly. They're going to happen promptly. Information is going to be there, and I think there's nothing stopping sales closing in when you do the sale of the property in 4 or 5 weeks once all that information is got at the beginning. And again, solicitors will probably have a problem here, because they will have to do a lot of work with people, so people are going to pay up front to get their documentation, to get all this work done as well, which is another problem, I think, from a lot of people's point of view. But if we're going to move on and get away from a situation where sales are taking up to 20 weeks to close, I think if we can't do e-conveyancing, which seems to be a problem, I think this is one of the ways that we can lead into e-conveyancing in the future, and I think it's going to be a huge help. And I think from all agents' points of view, I think it's going to be very good.
Yeah, Pat, I think that would be fantastic. And more importantly, I think that there's never going to be a good time to do that. But now that the marketplace has been disrupted in this way, this might just be the time for positive change. So that's definitely something I'd love to discuss with you again at another time. And I know that we'll have plenty of time over the next weeks, certainly to put those kind of strategies and to start putting those kind of things in place. And now there's never been a better time to act than now. So that was Pat Davitt, CEO of IPAV. Pat, thank you so much for joining us today. That's it from us today. Thank you for listening in to Property Matters on Dublin South FM, the show where property matters. Get in touch with the show by emailing hello@ipropertyradio.com or on Twitter @ipropertyradio. Also, thanks to Peter Rice on sound and show producer Katie Talon. We're back at the same time next week. From myself, Carol Talon, and all the team here, stay safe.